Hello, YouTube. This weekend, we're going to be focusing on two bounces. The first one being a failed bear market bounce, where we needed 434.6 to birth a new bull market or 20% off the lows. It failed, it fizzled, and it led to a new low. That was our October low, sorry. And now, in this most recent period, coming off our October lows, we are now up by more than 20% at our intraday high. And on a closing basis, we're off by about 5 points or just over 1%. So are we going to actually get the birth of a new bull market or a weekly candle close, which could happen as early as next week? Or is this just going to be another fade? I want to pay attention to this one pattern right here, which is really, really obvious. And I'll show you the reason why in a moment. But just recognize that Jerome Powell is going to be speaking again on Tuesday. And with extreme greed in the market, I want to see whether or not Jerome goes, excuse me, extreme greed? Time to squash some of that out? Or is he going to say, you know what, that's okay, nothing wrong here? Why? Well, because it's just mostly retail. As I look here to our community poll, which we launched last week, I am now seeing another record reading. Last week, we asked about up or down, and 64% of people said down. Now this week, with about 1,000 votes so far, 67% of people think that it's time to go down. So there is extreme greed, but I think that retail is still set to pay. So Jerome Powell speaking on Tuesday, and that is the most decisive data point for me this week. He's going to be speaking on Tuesday with David Rubenstein, who is the chairman of the Economic Club of Washington, D.C., which means there's going to be more of like a general Q&A. David Rubenstein is an excellent interviewer. I think that there's going to be some nuggets we're going to get inside of here, and that's what I'll be paying attention to. There's not really all that much going on for earnings this week, so you can pause the video if you want to see those. I think we pretty much got through the bulk of earnings, though. Another balloon is flying over Latin America, Pentagon says, and there are some moves being taken this week. So Blinken trip to China postponed after suspected spy balloon spotted over the U.S. That is what I think could potentially cause some rift this week, is the geopolitics. So, I'm just seeing a breaking headline here that they took down one of the balloons. So there you go. Last thing to focus on when we're going to be thinking about Jerome Powell is, for me, I laid this out very briefly before, but I think there's a possibility that we might actually avoid recession or soft landing. And I say that because if you looked at Q1 and Q2 of last year, which was an election cycle, 0.37 growth, negative 1.2, or just about 2 quarters of contraction. And when we get 2 quarters of contraction, that is the classical definition of a recession. So we basically got like 1.8, wasn't quite 2. And if we look to where we are right now in 2023, the preliminary number for Q1 is 0.67, which for me means that the earliest we could confirm a recession would be at the start of the third quarter, or basically 6 months from now. Why? Well, we need 2 quarters of contraction. So if we have a rolling recession, which means maybe it's not technically a recession here, it comes into the second half of 2023. That's probably the most likely scenario now, unless we actually start seeing this Q1 revision come down into negative. So instead of trying to get overly complicated, let's just listen to Jerome. And now getting to this one chart here I mentioned regarding at the very beginning. And please stay tuned all the way till the end of the video if you want to see how I'm planning to take these steps into an actionable trade setup this week. And please consider smashing the thumbs up. And it would be a huge favor to me if you could subscribe to the channel. We put out videos every single day. There we go. And now just moving forward here, looking at this one pattern on the S&P, I want you to note 2 things. The first thing being that we have a pattern of higher lows and higher highs every single week. We now have 6 weeks in a row where we have higher lows, and we got 5 weeks in a row, 5 weeks in a row where we have higher highs, which means we're not just defending, but we're also advancing. So in the period where we're forming not only higher lows, but also higher highs, I would call that an expansionary territory. Now let's look over here to the Dow. Why? Well, the Dow on the same period I have highlighted here is showing me very similar signals. Let's check how many weeks there actually are for higher highs. So there's a slightly lower high. Then we got 1, 2, 3, 4, 5, 6, 7. 7 weeks of expansion where every single week we form a higher low and a higher high. Now let's go back to the S&P. What do we have here? Let's get it nice and close for those boomer eyes. We got 1, 2, 3, 4, 5, 6, but it's only 5 where we actually print the higher high because that was an inside bar. So if we think about that and we add on 2 more candles, that would take us to basically almost the end of February. Okay, so technically I can see a reason why we would want to do that now. Now let's look back to the Dow and look at one more indicator, which is how many weeks we actually closed over the 50 weekly moving average before we ultimately stopped having that pure uptrend. Well, here we got 1, 2, 3, 4. And then on the fifth one is when we form a lower high, which means we stop going up and we form a lower low. Then we confirm it by actually getting a bearish engulfing and printing another low after that. But pay attention to this final pattern here. So we go over the 200, over the 50, over the downtrend, hit resistance, back off to the 50, bounce off, and then basically bounce off our apex. An easier way to look at this is just that ever since we formed our high on the Dow, we now have a double inside bar. It's only within a few cents here for the last 2 months, but that for me signals consolidation. So right now, if we look at this weekly pattern, going back here to the 1 week on the Dow, let's look at SPY. Okay, well, we have 2 weeks above the 50 here. So if we get 2 more, that would be a total of 4. It would be 7 weeks from the low where we're advancing with higher highs and higher lows every single week. And the reason why this is so interesting is because if we get another weekly higher high, we're basically going to be over 417.8. Right now, our high is 418.31. So if we can close over this area on a weekly closing basis, we birth a new bull market, in my opinion. So if you understand that after we get over the 50, if we ultimately do shoot back down, that could be all the way back here to the 50, test our uptrend, and that would almost perfectly match that move we had here on the Dow. Get over the 50 for 4 weeks, come back down, bounce, and then actually hold. We hold the uptrend and we bounce off of our downtrend. That's like Ed. That's what I'm watching for this week. We're going to give you more updates during the week, so please make sure to subscribe if you want to see all those videos. Again, if you wouldn't mind, please smash the thumbs up and consider subscribing to the channel if you're enjoying the content. It would be a huge favor to me personally. Thank you so much. So just continuing here, if we understand that the S&P is a broad basket of stocks, and the last time we had a bear market bounce, failing to get above 434, well, this time, like we've already poked over it. So that's one thing we weren't able to do back at 434. We maxed out at 431. So we got pretty close, but we failed. Now we've actually poked over. We got 418 printed. So we actually did print a level over 417. Look here to the monthly chart on S&P as well. And the reason why this is interesting is because we now actually have a higher high. So the Dow was consolidating, but the S&P consolidated last month and actually broke over 408 or last month's high, which means an expansion into the month. So what does this all mean, Justin? Because you're going through a lot of things. Well, I'll show you. It's QQQ. Why? Well, because QQQ actually closed in bull market territory. It closed at more than 20% off its lows by getting above 305.12 by about $1. But we're still more than 20% off our highs. We have to claim 326.96. So because the QQQ is what's picking up steam right now on the monthly, we look at that same pattern on S&P and the Dow. We see our head and shoulders pattern here. I'm going to do you one more favor by zooming out and showing you this here on a 12-month chart, because I think this will make the story very simple. We reviewed this briefly on our stream on Friday. Well, our 2020 high is 31469. What do we have so far this year? 31368, basically within $1. That's like really close. Yeah, that's like really close. And here on our weekly, we're like within $1. That's like really close. It's almost like people know what this math stuff is, like the robots that do most of the trading. So if that's the case, and we note that, okay, well, if we're going to continue our expansion and another weekly higher highs coming, well, we basically have to poke above 313.68, which means what? Which means we're pretty much going to be invalidating this area here on QQQ for the yearly, that 31469 area. Why does this matter? Well, the S&P is already broken above its 2020 high. That's our support on the 12-month chart. So it really comes down to QQQ. And I'm seeing that the S&P might be ready to go here. And one more weekly higher high and closing a second week over the 50. That is 2 candle closes over. And if after Jerome and after earnings we're still above that area, I have to believe that it's real. There are 100% some warning signs, and I'm going to go through those right now. So if you're bearish, these are the things to look for into the rest of the week. So we note here that S&P is green on the week by 1.6%. We note that the NASDAQ is up by 3% on the week. Here's where it starts to get funky. The dollar is up by 1%. VIX is basically flat. The 2-year note is up by 2%. The 10-year note is up by 0.5%. And that's weird, right? So S&P, NASDAQ green with all of our other indicators that are not good or going green is weird. Why? Well, oil's down by 8% today. We look here to gold down by 2.7 on the week. Bitcoin red by 1% on the week. So then we look to emerging markets and we see, okay, well, down 3. And then FXI, which is China, down 6. I showed you that news article before, which might come up this week. And then the DAX up by 2. So there is a clear divergence happening between equities, commodities, and crypto. So I told you what we want to see. We will update you all week. And if you're interested in joining me, Justin from YouTube, at the very top, you can see the banner as well. You can consider coming and joining me for a 14-day free trial by going to thealgo.com. If not, please stay tuned and subscribe to the channel so you can see all of the updates we're going to give to you this week. Thank you so much for watching.